What's up, guys? Milo here, April 27th, 10 o'clock a.m. Eastern Standard Time. Uh, Checking out the Bitcoin 4-hour chart, we had a nasty 5.27% decline yesterday. That's pretty much these cluster of candles here. I want to add that the volume was very high. The dump corresponded with our NASDAQ chart, which completed its head and shoulders pattern. Now, head and shoulder patterns are bearish patterns if and when the neckline breaks. And it looks to me right now, I know we're intraday, but we are struggling to stay above the neckline. And that's something to pay attention to. Because if we do dump down, the next range of support here is this orange line at about $300, and this again is the QQQs. From our current levels, that's about a 5.37% decline. Taking a peek at our daily chart, it's again a good indication. I mentioned in ChartSmart yesterday that this line has held up until the last couple of days here, and as these candles break the line, below the line, recovered, then break the line again, that weakens a support line. The more drubbing or the more pounding this line takes, the weaker it gets. So here we are in between, wedged in between our wick lows and our lower parallel channel lows. So again, correlation with the NASDAQ and the overall equity market. We'll see what happens. The $40,000 range, this lower line, if we were to see any bounce, you could expect this line now to act as resistance. As you could see here, this morning we had a nice bump up, but then again, sellers quickly came in and are pushing the price down. Currently, Bitcoin's up 1.3%, and that's overall tendencies of bear markets that you see a pump and it's quickly met with selling pressure. So we do want to see this lower line hold. However, this overall action to me is not looking that bullish in my humble opinion. Referencing the weekly chart, you could see here Bitcoin is flirting with this lower trend line. This lower trend line began in 2021 and it's made its way all the way to today. We've had a couple of wick belows on the weekly candles multiple times, but each time the line is held. Now here we are. We have 4 days and 10 hours left on this last candle. However, it would be important, as you could see, why we would want to remain above the line. The wick belows and a bump up above support is a positive sign. A close below is not so positive and would be considered bearish. Referencing back at our daily chart, the cycle chart, if we zoom in here and see what's going on. Now, I don't want to drub this point to death, but as you can see here, as we are wedged between this wick low and the lower parallel channel line, you see here, this is this candle yesterday, a 5.72% decline. It was ugly, but it wasn't a capitulation event. A capitulation event is a washout of all the weaker holders. And you could see, referencing here, this candle, it's called a hammer candle, as the daily close was much higher than the wick down low. So you saw institutions here buy up this wick low. Same instance here. You see another hammer candle. Institutions came and wicked up. You know, this weakness is not a capitulation candle. I would consider a capitulation candle 10 to 15%. So this did not happen. And this drubbing is not good for the overall market. It could take days for these lower lows and to come into play, and it's not exactly what you want to see. Below this wick line, we have this wick low of approximately 34,400. We have this line corresponding to this wick low at 32.7, and then ultimately 29,000, which completes our cycle chart. And we for sure don't want to see this cycle chart break, because we know below 29K is just going to get ugly. So these are some of the things I have my eye on today. I hope you enjoyed this episode, and we'll see you next time.